Welcome, ladies and gentlemen. Commodity TV out of our studios here in Munich. And with me here is now Sam Pazuki, the Director IR of Oceana Gold. And of course, we want to get an update and some thoughts on the recent share price drop, but also on the upside for the future. Sam, welcome.
Yeah, great to be here, Johan.
Thanks for taking the time. Let's really dive into it. I mean, Oceana Gold, a fantastic gold producer. Mid cap, I would say. But your share price dived some 40-50% the last weeks. And I think this has to do with the Philippines, right? Maybe you can give us a bit of light into that.
Sure. Yeah, no, it's been a challenging year for us. It's not something that we're used to. We're used to delivering very strong returns, very consistent, positive performance. And this year has been a challenging year for us. We initially had some challenges operationally with hail, with wet weather that we're dealing with from a year ago that persisted into this year. And over the course of this year, we have improved on a lot of operational metrics. Costs have come down, production has moved up. So things are shifting into the right direction for us at hail. But partway through the year, our contract, the FTAA in the Philippines expired. We were going through a renewal process. We're still going through a renewal process. But that's created some negative pressure on the share price. And we operated the mine up until, or I should say the process plant up until the beginning of October. And we run out of consumables. So we've had to shut down the operation, which has put on more pressure on the share price. More recently, we've hosted a very successful site visit. And we've articulated the plans in terms of the growth that we have in New Zealand, which investors are very excited about. But we're still not getting the value for it. So whereas the gold price has moved up and a lot of the gold companies have done well this year, we've actually gone in the opposite direction for these things that I've mentioned. But we are very hopeful that we're going to overcome these challenges and get on with business.
Yeah, and what I highly appreciate is that you are not hiding, you are talking about it, you are explaining it, because this is quite unusual in the mining business. Sometimes you only see those rosy, beautiful blue sky potential, but we are dealing with Mother Nature. We are dealing with people, we are dealing with politicians, and sometimes things maybe go a different way. So what measures are you taking to get rid of that, of course, and what measures are you taking to get, let's call it the permit back, to produce that?
Sure. Yes, we're very focused as a management team, as a business. The board's very focused on basically turning the ship. As I mentioned with hail, we were dealing with Mother Nature, we were dealing with some of the softer issues around employment. There's a labor shortage in South Carolina because of the U.S. economy being so strong. We've taken an opportunity to upskill the workforce and bring in some very strong skilled workers from Nevada who worked at Barrick or worked at Newmont. So we've been very focused on turning that asset around and getting it into the right place. So the way I describe it is that hail is a good asset right now, and we're in the process of making it into a great asset. And we're certainly on the track, especially we have the team in place to be able to do that. With respect to the Philippines, we haven't lost sight of what we need to do. We've engaged with the national government. They support us. They support the renewal of the FTAA. We communicate with our employees. We are respectful that their livelihoods are impacted by what's happening right now. So we're very much engaged with them, and we're working very hard with the national government to get the FTAA renewed. We're sort of like the duck you see gliding along the water. You think everything seems calm, but underneath the water, the feet are moving rather quickly.
That's paddling.
That's right. That's right. But yeah, it's been a frustrating year from our perspective, because this is not what we're used to. We're used to delivering very strong results. And so we're very much committed to right the ship and turn things around and get back to what we're used to. And that's delivering consistent positive results for shareholders. And you're right, we don't hide behind bad news. I think the best time for us or an optimal time to be out there talking to investors is not when times are good. Everybody's happy when times are good. It's to be able to be there in front of your investors, look at them in the eye and tell them, these are opportunities for improvement. This is what we're doing to address some of the challenges that we have. and then it's on us to then go and execute and communicate with them.
Okay, then let's talk about some, let's say, good things coming up, because you had fabulous exploration results. Yeah, I mean, at Waihi, for example. Can you give us a bit of a more flavor into that? Yeah, what does next year look like? What is the planning for, let's say, the next 2 to 3 years?
Sure. We're very excited about the growth opportunity that we have at Oceana. We believe that we have the best organic growth pipeline in the industry. Through Haile and the continued ramp up and then the build up of the Horseshoe Underground, Haile will become a 200,000 plus a year producer within the next few years. And after the Horseshoe Underground is built, there is a little bit of capital associated with building out the tailings, but we're basically going to be harvesting very strong free cash flow generation from that asset, in 3 or 4 years. Waihi is really where the deepest value is in the business. The biggest growth in the business is going to come at Waihi. First is the Martha Underground, which we're building right now. It'll go into production in early 21. And once that's ramped up, it'll be producing 90 to 100,000 ounces a year from the 60,000 ounces that we are this year and the 20,000 ounces.
What cost do you think, probably?
We think it's going to be consistent with where we've been historically, in $750, $850 range.
It's a nice margin.
But we are working on the study right now, which is more than just the Martha Underground. It's actually a Waihi district study that we're working on. So in the first half of next year, we'll come out with the results of that study, which will daylight the opportunity that we see at Waihi for that operation.
Yeah, you had also some phenomenal exploration.
That's right.
Results, right?
Yeah, we continue to have very strong exploration results. The market has been very focused on what's happening at Haile and at Didipio. They've sort of lost, I wouldn't say interest, but they're not paying as much attention to the exploration results that we've had at Waihi with Martha Underground, but also WKP, Wharekirauponga. That's right.
Still hard for me to say it.
That's right. Well, just early in November, we released some recent drill results from WKP, and one of those intercepts was 25 meters at 40 grams. We believe that this year that has to be one of the top 3 drill intercepts globally. But again, it didn't really get the attention that we think it should have deserved, because that is a significant intercept to have. So Martha Underground is the first step of Waihi's growth. The other step is WKP. So it's very early days. We still need to do some more exploration work. We got to do some environmental study work, and it's part of the Waihi district. We'll understand what WKP's contribution could be to the overall project.
Absolutely. Can you maybe describe for our viewers a little bit, because those questions were arising in some discussions. What would it look like? Let's assume the Didipio is no longer going online. What would it mean for the company? Because you have a lot of other good projects, and let's assume you get it within the next 6 months. What are those 2 scenarios? What would they look like? Production wise, cost wise, stuff like that.
Yeah, we're working through the budget process right now, so I can only speak sort of high level in terms of what some of the numbers might look like.
Of course, yeah. It's a forward-looking statement for the regulators, please.
Yeah, so so Didipio is no doubt that it's a major cash generation operation that we have.
Absolutely,
there's no doubt that it does generate a lot of cash for us, but we're not just a one pony show. We've got 4 operations. Didipio is one of those 4 operations. And we have the confidence that it will get back into operation. We're not sure timing-wise when that will be. So we have to, when we're planning our business, we have to plan under a scenario where there is no Didipio for next year, for example, and then you plan for a scenario with Didipio. So with Didipio, we're sort of what the original guidance was for this year, 550,000 ounces on a nominal basis, plus copper, so 10 to 12,000 tons of copper. Costs, it is more variable, but it could be similar to what we've done previously, which was 850 to 900. Under a Didipio, without a Didipio for the full year scenario, you're basically taking off 110 to 120,000 ounces of gold production. You take off the copper, and our costs then are around, $1,050, $1,100. Again, subject to going through the budgeting process.
Of course,
But in high level terms. That's sort of where things would end up.
But it means to me, you make money.
That's right.
You're not in the loss situation, because as your share price dropped, to me it looks like today you are valued without those 2 properties, right?
That's right.
It looks a bit. So it's a great opportunity.
Yeah, absolutely.
Right?
Absolutely.
Yeah.
I mean, from our perspective, Didipio is trading at zero, possibly even negative. I think it's actually weighed on the stock more than what its net asset value is worth.
Yeah.
Wahi, we were never getting the proper valuation for Wahi to begin with. And we believe it's now been discounted down to zero because of the 9 month to 12 month, or the 12-month production gap.
Yeah. I think it's also important to have a look, let's say, at the cash situation and debt situation you have. Because when I looked at your presentation at the website, I thought like, net debt around $150 million, that's not much. And I mean, this looks to me quite healthy, and you're also paying a little dividend, which might rise in the future, who knows, But to me, it looks like that you are quite healthy financed also, and you are making money. You have a positive cash flow, positive EBITDA, of course, and finally, still you have profits, correct?
Sure.
And I think this differentiates you from a lot of companies.
Yeah, absolutely. I mean, we've never believed that a gold mining company should take on too much debt because we're price takers. So when the gold price comes off a cliff, if it moves down sharply, then you don't want to be stuck there with too much debt.
Oh, yeah.
So we've always, I mean, you look back to our history, going back to 2011, for example, when we were building Didipio, we levered up to build Didipio. It went into production in Q1 2013. And as it's generated strong cash flows, we paid down the debt to 2015, where, as you know, the gold price hit its lowest point. And we became very acquisitive during that period. And because of our strong balance sheet, we were able to do some transactions, including Wahi, including Remarco, which brought Haile into the portfolio. So then we were building Haile, and we levered up again to build Haile. And as that went into production, we started paying down debt. So if you actually look at the trend of how we've managed our balance sheet, we've levered up during growth mode, and we've levered down when we're in production mode. And today, one of the metrics that we use to assess how much leverage we would take on is we look at the total debt and we divide it by the total assets on the balance sheet. And we haven't been this low in a very long time on that metric. So there is an opportunity. We could take on debt in the absence of Didipio to finance some of the growth, like Martha Underground, that we have next year. But again, we're pretty hopeful that we can work with the government, continue to get positive signals from the government in the Philippines, and get Didipio back into the portfolio and that cash generation to come fund the growth operation or great growth prospects that we do have.
Fantastic. Can you elaborate a bit on the shareholder structure? I mean, I saw BlackRock, for example. Yeah, they have, what chunk do they have? And other large institutions, I would say.
Sure. So I love our shareholder register. We have some very strong shareholders that have been with us, some of them for the last 10 years. They've been there to support us. They've believed in the strategy. They've believed in our ability to execute on that strategy. And even this year has been difficult on us. It's been difficult on them as well, too. And I would say the people that have been buying the stock, when it's down here where it's been over the last little while, it's been our existing shareholders. So BlackRock is our largest shareholder. They own about 15% of the float, making them our #1 shareholder. And most of that's actively managed out of London. But we have other strong names such as Fidelity and Franklin. We have Ingalls & Snyder, which is based in New York, and they've been shareholders since 2009. So we've got very strong shareholders in London. We were just in London this week, and we met with all of them, from Schroders to Ruffer to Investec. So we have a very strong shareholder base. They're very supportive of us, and we certainly want to work hard and not let them down, and the rest of our shareholders as well.
Fantastic. That was a great final sentence. Sam, thank you very much. I would say Merry Christmas, keep it going. All the best for 2020, and I have a good feeling that the upside will surprise us.
I hope so too. Yeah. Thanks so much,
Fantastic.
and Merry Christmas.
Thank you very much. Yeah, ladies and gentlemen, there was Sam Pazuki, the Director IR of OceanaGold. And yeah, you heard it, challenging 2019, but the company is really addressing hard and fast the issues they have arisen, of course. But you heard it, the shareholder base is very strong, very good institutions. They are all supporting the company. And believe me, when those big institutions make their due diligence, they also make it really tough. And so from that side, I think the company is really undervalued. On the one hand, they don't get any value for Wahi, and they don't get any value today for the Philippine operations. And so from that side, I think great opportunity. Check out the company. Thanks for watching us, and Merry Christmas. Bye-bye from Munich.